Hello guys, here we are again. I hope you got a chance to work on that problem for chapter 20. I think I assigned problem 20-5A, is that correct? And again, how many people got it to work out? Okay, all right. I know it is, I know last class period was a lot of moving numbers around and that sort of thing. I think this class period will be a little less numerical, but let's go ahead and go through problem 20-5A, okay? So let's take a look at that. Let's take a look at that. Okay, this is the problem. I went ahead and photocopied it from your book. This is problem 20-5A. Let me zoom in on it a little bit. Okay, all right. Okay. Tamar Company manufactures a single product in one department. All direct materials were once again added at the beginning of the manufacturing process. Direct labor and overhead are added evenly throughout the process, okay? The company uses monthly reporting periods for its weighted average, process cost accounting. During May, the company completed and transferred 22,200 units of product to finished goods inventory. Its 3,000 units of beginning goods in process consist of 19,800 of direct materials, 123,300 of direct labor, and 98,460 of factory overhead. It has 2,400 units that are 100% complete with respect to direct materials and 80% complete with respect to direct labor and overhead in process at month end. After entries to record direct materials, direct labor, and overhead for May, the company's goods in process inventory account follows, right there, correct? They want us to prepare the company's process cost summary for May using the weighted average method, and they want us to prepare the journal entry dated May 31st to transfer the cost of completed units to finished goods inventory. All right, we can do that. Okay, first of all, let's do what we did last time. This is our beginning balance right there, correct? The 241,740, is that correct? Mm-hmm. And we know what that is comprised of. It says there in the verbiage, as far as the different product costs: direct materials, direct labor, and factory overhead, right? Direct materials, where does it say that? Its 3,000 units of beginning goods in process consist of 19,800 of direct materials, 123,300 of direct labor, and 98,640 of factory overhead. Okay? Now let's add those numbers up. And if we add those numbers up, we get 241,740. Is that correct?
Yep.
And this is what is in beginning goods in process. Is that correct, guys? Mm-hmm. Okay. So that tick mark ties over to there. That's what that's comprised of. Correct? Now, these were the amounts incurred in May for direct materials, direct labor, and overhead. These amounts right here. Is that correct?
Yep.
And if we add those up, that equals 2,662,740. Okay? Is that correct?
Correct.
Okay, so what we have here, again, we're going to go back to this illustration right here, where we have the beginning of something plus what comes in it equals a subtotal. Some of it goes out, and the remainder is ending inventory, okay? In this case, what we are talking about is the beginning goods in process inventory plus, let's call it costs incurred in this period. I think I called that COGM last time. Costs incurred in period is probably a better term for that, okay? And that's going to equal some number, right? And part of that number is going to get transferred out to finished goods inventory. And the remainder of it will be ending goods in process inventory. Is that correct? So we know some of these amounts from what we just did, okay? We know some of these amounts from what we just did, correct? Well, the beginning goods in process is 241,740. Is that correct? Do you concur? Okay. The costs incurred in this period are these costs right here, which add up to 2662,740, right? And if you add those two together, you get the ending balance of 2,904,480. So that is 2,904,480. Is that correct? Now we want to determine of this amount how much of it is transferred out to finished goods inventory, and then how much of it remains in ending balance of goods in process inventory. Okay, so we're going to go through this whole process just to figure that out. Cool? All right, let's go. So what we got here is we got our sheets. Let's look at the first page. And the name of this company is what? Tamar? Is that correct? Yeah. And, oh, that's actually, this is what? Tamar goes down here, doesn't it? This is problem what? Let's go ahead and write it.
20-5A.
Problem 20-5A, and this is Tamar Company. And what month is this ended?
May.
May? Okay, good. Okay, let's take a look at this. Now we know we need to do our cost charged to production for beginning goods in process and incurred this period, correct? Now this is what we just looked at. These two numbers right here, right? Beginning goods in process and cost incurred this period. So these numbers go right here, okay? This is 241,740, and this is 2662,740, okay? And we know that those two amounts add up to 2,904,480. Is that correct? Okay, now we know how those amounts are broken down, though, in regards to period costs, don't we? Or, I'm sorry, product costs, don't we? Mm-hmm. Okay, that 241,740 we did on this sheet, and it's listed there. The breakdown is right there. Direct materials are 19,800. Direct labor is 123,300. And factory overhead is 98,640. And you can add those up to make sure that that equals that. We also know the costs incurred this period. And it's these costs right here, correct? For each product cost, and they should add up to that. Well, those amounts for direct materials, direct labor, and overhead, respectively, are 496,800, 1,203,300, and 962,640. And again, you can add those three up to see if that equals that. Okay? You with me? These are the total costs we need to account for. Cool? All right. Now we have to go down to this information right here. And we know that that number has to equal this number, correct? Okay, they give us some of this information. Let's see what they give us. They completed and transferred 22,200, is that correct? Units? Okay. And we have 3,000 units of beginning goods in process, is that correct? And what else do they give us?
The ending goods in process.
Do they give us the ending number of units is what?
2,400.
2,400. So those two numbers add up to 24,600. They don't give us this number, but we can back into it because we know that those two numbers will have to add up to 24,600. So this must be 21,600. Is that correct? Okay. Now we're going to take this information right here and we're going to figure out equivalent units of production. Okay. Well, we know the goods that were completed and transferred out are 100% done, right? So this is 22,200, 22,200, and 22,200. Cool? Okay. We know that as far as units, ending goods in process, this was 2,400, this is 2,400, and this is 2,400. Now, what percent complete are direct materials?
100%.
100%, right? What percent complete are direct labor and overhead?
80.
80%. Because we apply overhead based on labor, correct? So we multiply these out to get the equivalent units, and that equals 2,400, and this equals, is this 1920? Okay? Now if I make a mistake, guys, I want you to catch me right away. Just interrupt me, okay? All right, we add those up, and this equals 24,600 equivalent units of production for direct materials. And this is 24,120, and this is 24,120 equivalent units of production for direct labor and for factory overhead. Cool? We all good? All righty. Let's go to the second page. All right. Let's figure out our cost per equivalent unit of production. Now, we need to go back to that beginning goods in process amounts for each product cost and the cost incurred this period for each product cost. We have these here, right? Okay, for the beginning goods in process and the cost incurred this period. So we fill in this data. This is 19,800. This is 123,300. This is 98,640. Is that correct? The costs incurred this period for each product costs are 496,800, 1,203,300, and 962,640. Is that correct?
Yep.
Add these up, and we get 516,600. 1,326,600 and 1,061,280. Okay? Well, do we know our equivalent units of production? Yeah, we do. It's at the very bottom of the previous page. These numbers right here, right? So this is 24,600 equivalent to unit of production for direct materials. And for direct labor and overhead, it's 24,120. Okay? Okay, let's figure these out. That divided by that equals what?
21.
21 even, right?
Mm-hmm.
That divided by that equals,
55.
that divided by that equals,
44.
44.
okay? All right, cool? We're on the home stretch, aren't we? Okay, any questions so far? All right, so now what we do is we take these amounts and take them to these columns right here. For direct material, direct labor, and overhead, it's 21, 55, and 44 respectively. So we write that here. 21, 55, 44, 21, 55, 44. And we need to know our equivalent units of production that were transferred out and ending goods in process. Is that correct? All right? So, where do we get those? We get those right here, correct? The equivalent units transferred out and that are in the process. So it's these numbers right here. Is that correct?
Mm-hmm.
So this is 22,
200.
200. And this is 2,400 for direct materials. And this is 1920 for direct labor and factory overhead. Is that cool?
Mm-hmm.
Multiply these out. This is 466,200. This is 1,221,000. This is 976,800. This is 50,400. This is 105,600. This is 84,480. Right?
Yep.
So now we add those three numbers up to get this number, and I believe that equals 2664000.
Yep.
2664000. And these equal 240,480. Is that right?
Mm-hmm.
Add those two numbers together, and what do we get? 2904.
480.
480. Now here's the big test. Does that number equal this number at the top, in the middle of the first sheet? They equal. Yay. Okay, that's good. Okay. So now we can fill out our journal entry with which of these numbers?
Cost transferred out.
266,4. And there's our journal entry. Correct? Now, you guys, did you figure out where your mistake was?
We just had an adding error.
It was just a math error.
Mhm.
Easy to do, isn't it? Okay. Now, if you know Microsoft Excel, something like this is a lot easier, isn't it? Okay. How many people know and use Microsoft Excel on a regular basis? 2 of you. If you take managerial accounting from me, the first week of class, I will teach you Microsoft Excel, and we will use it throughout the semester. And you will ask yourself, well, why did I ever do process cost summary with a calculator and a pencil? Okay, it's a lot easier with Excel. But you guys got it, right? Now remember, the whole purpose of this was to figure out of this amount, zoom out a little bit, of this amount of these costs to account for, we needed to know how much are transferred out to finished goods and what remains in ending goods in process inventory, right? The number transferred out to finished goods was 26664?
Yeah.
And the amount that remains in ending goods in process inventory is 240,480? And of course, that will be the beginning balance for the next month. June's beginning balance, won't it, of goods in process, and we can do this all over again. Okay? But all this was done so that we could do this for process costing. You with me? Okay. All right, you can come off that. Any questions on that, guys? Anybody? Anybody? Okay. Take a deep breath, and we're going to start chapter 21. And it will be a little less numerical, okay? So let's start chapter 21, okay? Let's start chapter 21. All right. Okay? Did I give you guys the PowerPoints for these yet? I forgot to bring them. I'll bring them next time, okay? Or if you want, you can follow me to my office afterwards, and I'll give them to you. Okay, sorry about that. Okay? All right, for you folks at home, you should always print out these PowerPoints. You know where they are on D2L. But let's talk about chapter 21. Now, I will warn you, this was chapter 22 for the last 14 years, okay? So if I accidentally say chapter 22, just shout out chapter 21, okay? Because I don't want to confuse anybody, but old habits die hard. I'm used to this being chapter 22, okay? All right. This chapter is on cost, volume, profit analysis. This is a really important chapter. As a matter of fact, come off this real quick. You know how you get to drop your lowest test? Remember that? Okay. And that is of the first 3 tests that we've had. Okay, we've had 3 tests, right? I just handed you back your third one over 18 through 20A. The test you drop, and this is for you folks online as well, the test you drop will be the lowest of those 3. What we're doing from here on out, we will take an exam over that, but it will be, we only have one more exam in this class, and it's the exam that we take during finals week. Okay? That's the only exam left, is the exam that we take during finals week. Okay? It's not comprehensive, okay? But that cannot be the test that you drop. It's going to count. So if you got all A's on your first 3 tests, that's great, but you can't drop this last one, okay? This one's going to count. And I do that for 2 reasons. Number 1, if I let you drop your lowest, if I let you drop this last test, if you got A's on your first 3 tests, you would tune me out for the remainder of the semester, okay? And I don't want you to do that. But more importantly than that, everything we cover from here on out is just really, really important, okay? I know a lot of you are taking managerial accounting, and you will see all this stuff again. And I really want to work on getting a good foundation of this information for you. It's really important to use for both your classes that you'll take and also your business education and the job that you'll eventually get, okay? So this is all really important. So let's go back to the slide. Chapter 21 is cost, volume, profit analysis. What we're eventually going to answer are questions such as the following. Let's say you open up a coffee shop and you want to say, well, how many cups of coffee do I need to sell in a month, maybe to break even, so I don't have a net income or net loss? Or what if I want to know how much I need to sell to earn a desired income? Okay, I want to earn a certain amount of money so I can pay my personal bills. Or we'll eventually ask and answer questions such as, well, how will my income be affected? Let's say I reduce the selling price of my coffee and I think it will increase some sales volume. Is that a good move? Should I do that? Should I not? Well, it depends. We'll learn how to analyze those types of questions, okay? We won't get there today, though. Let's do a little bit of a refresher. Variable versus fixed costs. All right. Now, variable versus fixed costs is how a cost will change in regards to the level of activity. Now, total variable costs change as activity changes. Total fixed costs do not change as activity changes. Remember we talked about this? Now, I want to really think about this, though, because we're going to go a little deeper level than what we went through in Chapter 18, and I want you to understand it. Let's say we are a bookshelf manufacturer. Total raw materials cost is a variable cost, isn't it? And you will spend more in total on your raw materials the more bookshelves you produce, right? So, as the bookshelves produced increases, the total raw material cost, say of lumber, will increase. That's not hard. That's not difficult, is it? Okay? Now here's the concept I really want you to wrap your brain around, though. Yes, total variable costs change as activity changes. But if we are talking about a per unit basis, variable costs on a per unit basis stay constant. For example, we could say we use $2.75 of raw material per bookshelf, per unit. Does that make sense? It's very important that you get that. Yes, variable costs in total change as activity changes, but variable costs on a per unit basis stay the same. Okay? As you can see down here with this graph, because this is per unit. Okay? Now let's look at fixed costs. Fixed costs do not change as activity changes. Okay? For example, the monthly cost of renting the facility. Okay? The monthly cost of renting the facility does not change according to the number of bookshelves produced. Let's say it's a pretty big facility, okay? And let's say that we pay, $10,000 a month for the rental of our facility, of our factory, okay? Well, whether we make 1,000 shelves, we pay $10,000 in total. If we make 5,000 shelves, we pay $10,000 in total. If we make 20,000 shelves, we pay $10,000 in total. You see that? Total fixed costs do not change as activity changes. However, if you wanted to figure out fixed costs on a per unit basis, I want you to understand that that will decline as activity increases. Fixed costs on a per unit basis, it declines as activity increases. Okay? For example, let me go over to the Elmo real quick. Okay? What did I say about our monthly rent was? $10,000, right? Well, if we make 1,000 bookshelves, then we could say, well, rent is $10 per unit on a fixed basis, correct? Now, if we made 5,000 units, it's now down to $2 per unit, correct? All right. Well, if they made 10,000 units, it's now down to $1 per unit. Is that correct? So as the activity level increased, the fixed cost per unit decreased. And that's just what this graph shows us, right? Now, once again, we are talking about, though, on a per unit basis. Now, I will tell you this, and you'll hear this a lot from me in managerial accounting if you take me. I don't like to figure out fixed costs on a per unit basis because I think it's very misleading. I think it seems to indicate that fixed costs behave as variable costs when they do not, right? For example, looking back at this Elmo, if I say that rent, let's say we made 5,000 units, if I say rent is $2 per unit, why would you not think that to compute total rent for the month, you would not take $2 times the number of units that you produced? Does that make sense? It's very misleading when you state fixed costs on a per unit basis. You can come off the slides here. Let me give you another example. Let's say you three guys live together in an apartment, okay? And let's say the total cost of your apartment for you three guys, the total cost is $900 a month. You divide it up evenly, so how much do you each pay? $300 each person, right? Okay. All right, well, that's cool. Well, let's say Henry's driving around looking for a place to live. And he sees Daniel walking around the parking lot. And he says, hey, do you live at these apartments? He goes, yeah, I live here. And Henry says, how much does it cost to live at these apartments? Daniel says, it costs $300 a person. Well, Henry goes, well, it's just me. This is great. I can live here for $300. He can't live there for $300, can he? But if you state that that apartment is $300 per person, why would he not think that he only has to pay $300 since it's just him by himself? You following me? Okay. Now, you'll hear me again. You'll hear me say this a lot. Well, we need to be aware of this fallacy, though. We need to be aware of this as we go through accounting. Let me take a look at the summary of what I just said, and I want you to put a star there on that slide. If you had the PowerPoints, I'll bring them next time. Okay. Variable costs in total, they change as activity changes. Fixed costs in total remain the same. You with me? Now, if instead we are talking about on a per unit basis, variable costs per unit remain the same on a per unit basis, and fixed costs change as activity changes. Or we could say the fixed cost per unit goes down as activity level goes up. Jeremiah.
So what, like on your bookshelf example, let's say the price of lumber increases, so that would change your
Okay, well,
variable-
we're assuming a constant price
Okay.
of lumber for at least that time.
Okay.
Okay, good question though. All right, I want you to do the following, and I want you to answer it in your brain. I don't want you to shout out the answer, okay? Don't be a shouter-atter, okay? Figure this out in your brain, and we'll go over it. We'll talk about the answer here in a second. Fill in the blank. The type of cost that does not change and stays constant on a per unit basis is a what cost? What is the answer to this? What's the answer? You can say it now. Okay? What is the answer?
Variable.
It's variable because I'm asking on a per unit basis. Take a look at this. It's variable because it's asked on a per unit basis. But do you see how somebody might focus in on this does not change, stays constant, and that just sounds like a fixed cost. Well, it would be if I was asking about it on a total basis, but I'm not. I'm asking about it on a per unit basis. Are you with me? So be aware of that. Cool? Questions? All right. Let's talk about mixed costs. Okay? Mixed costs are just that. We've talked about variable costs, we talked about fixed costs. Mixed costs contain a fixed portion that is incurred even if the activity is zero, but they also contain a variable portion that will increase as activity changes. All right? And so the example that I like to think about the best is, have you ever rented like a U-Haul truck? Okay? The way that they charge for a U-Haul is they say it's like, okay, it's going to be $30 plus 25 cents per mile. That's the level of activity in this case, right? And then you take that times the number of miles that you go, and that gives you your total U-Haul cost. Is that correct? Isn't that how that works? Yeah. Well, this right here is the fixed portion, correct? And this over here is the variable portion. Would you agree? Okay, so it is a mixed cost. All right? Now, if we want to graph this out, we see that it is an upwards sloping line. Okay? So as the number of miles driven increases, the total U-Haul cost does increase. But this line does not originate down here at the corner where it's zero, right? It originates up this y-axis a little bit. That's the y-axis. This is the x-axis, correct? And we actually know what this point is right here for the example that I just gave. For the example I just gave, what is that amount? That's 30, correct? Because even if you rent this truck and drive 0 miles, you just sit in the parking lot of the U-Haul facility and listen to the radio like a lunatic, they will still charge you $30, correct? But as you drive more miles, the total cost will increase, right? And you can see the slope of that line. Okay, come off that for a second if you would, please. And we know that like if this is our variable cost line, this is a higher variable cost per unit than a line that's like this, isn't it? The steeper the slope, the greater the variable cost per unit. Correct? All right. Okay, cool. Now let's talk a little bit about what we call stepwise costs. Stepwise costs. This is a cost that changes as activity changes, but it does remain constant within a narrow range of activity. Okay? All right? Now, the best example I ever heard about this was actually one that a student gave me years ago, and I told her I would use it forever. Okay? So let me tell you about the example of her stepwise cost. Okay? She worked at a daycare facility. Okay? And what they did is families would sign a contract for the year for their child to be watched at this daycare facility. You with me? Okay. Well, if they had 0, 1, 2, 3, or 4 kids that had signed contracts, they would hire one staff person at a full-time salary of $25,000 per year. So 0, 1, 2, 3, or 4, one kid, or one salaried staff worker. Does that make sense? But if a 5th kid came on board with his family signing a contract, they would not work this person a few more hours. They would not hire somebody part-time. They would hire an additional worker at another $25,000, so the total salaries would be $50,000. And that was sufficient, they felt, for 5, 6, 7, and 8 kids. You with me? And then if a 9th kid came on board, then they hired another one, right? And so you can see where this is kind of a step, isn't it? It does increase as activity changes, but it stays constant within a narrow band of activity. Cool? See what I'm saying? Okay. It almost might work that way. You can come off that. Might almost work that way a little bit with college classes, right? Like they can pay me my salary. I make $200 a semester for teaching this class. No, I'm kidding. It's like twice that. Okay. And this room has what? 14 seats. Now, let's say the limit here as far as the fire limit is 14 students. Well, if a 15 student comes, I'm not just going to teach part-time. Well, you have to have a whole new class, don't you? Okay? So that's the stepwise cost. Okay? Questions on that? I know I'm doing a lot of talking today. Apologize. We'll do some more in-class stuff next time. Okay? So online students, take a break if you need to. All right. Let's talk about curvilinear costs. Curvilinear costs. Now, these are costs that change as activity increases, but it is not a straight line, okay? It increases in a non-linear manner. And you can see how that line is kind of curved, right? Okay? So it's increasing at different rates depending on what activity level you're at, right? Now, even though that line is curved, sometimes we will just be analyzing a small range of activity. And by golly, for that range of activity, that line is pretty much approximately straight, isn't it? So sometimes even when it is curvilinear, if we're examining just a limited range, we'll kind of make the assumption that it's somewhat of a linear manner that it operates. Cool? All right, you with me? Okay. Any questions on any of this? Now we're gonna address this stuff next time in more detail. But I want you to do some homework. I'm going to let you out a little early today, okay? Since I talked so much. Okay? So what I would like you to do for homework is this. Okay, I want you to do problem 20-4B. That has to do with process cost summary, okay? And then from chapter 21, I want you to do quick study 21-1 and 21-2 and exercise 21-3. 2. So that's it for homework. These are real quick. These take a little longer, but I think you're probably going to be a lot quicker on it this time than you were for the homework due today. All right? Any questions, folks? All right? Hey, we're on the downhill stretch. Semester will be over soon. But this is really important stuff. I really, 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 really want to encourage you. Do your homework, okay? Do your homework. This is all material that you have to do your homework if you truly want to learn this stuff, okay? So do your homework, have it done by the time that you come to class next time. You folks at home that are taking this as an online class, always be checking the red calendar on D2L for due dates of tests and Connect assignments, all right? Hey guys, have a good one. We'll see you later. Bye-bye.